Hello, welcome to Thai Academy, and today we are going to solve a complex exam question relating to manufacturing account, and I'm going to pick the NECTA 2018 question number 9, which states as follows. We are given a trial balance of Mr. Mshamba, and you are required to prepare a statement of manufacturing cost and also a statement of financial position as at 31st December 2018. So first, before preparing the statement of financial position, we should prepare the manufacturing cost statement in order to calculate the cost of goods manufactured. And in order to calculate the cost of goods manufactured, we should add all the direct cost and the indirect cost. So direct cost simply comprises of direct materials, direct labor, and other direct expenses. So I will start by recording the materials, whereby I will start the opening stock. Shall have the opening stock of raw materials. Opening stock of raw materials, which have the cost of code, and I write it on this side. After there, we should add the purchases of raw materials because it adds stocks. Add purchases of raw materials. But when you add purchase of raw materials, you should there is carriage inwards. So purchase of raw materials had a cost of 7,400,000. But also there was carriage inwards of raw materials, so we should add them. Add carriage inwards of raw materials, which are the cost of 70,000. So after adding the two, get the sum of 64,700,000. So we add the opening stock and purchases. We get a total of 7,089,822. So after adding there, we get the cost of goods. Shall get the cost of raw materials available for use, because the manufacturing cost statement is mainly for producing goods, so we should not sell them. So we shall get the cost of wood available for use, and last we are going to less the closing stock of raw materials. And the closing stock aiweke kwenye trial balance, so we are going to take it from the additional information, which says inventory of raw materials of 480. When I'm lessing, I'm going to put a bracket showing that the amount will be less. So when you take 78, you minus 480. So I'm taking 78,90,000 minus 480. So I'm going to get 7,041,000. Kwa hiyo ambayo tutapata hapa itakuwa ni cost of raw materials consumed. Tutapata hapa cost of raw materials consumed. Hiyo ni upande wa raw materials zenyewe. So tukishapata hizo raw materials, remember that in order to calculate the direct cost, we should add the raw materials and other direct cost related. So I'm going to add other direct cost. And from the question, the other direct costs were wages, which was 3,600,000, We have direct wages. We have direct wages of 3,600,000, and the other direct cost was royalties. We had the royalties of 140,000. There was no any other direct cost, so we add the two. Get 3,740,000. So tukishazi add hizi hapo utaenda kuadi na ile cost of raw materials consumed. Add na 74,673, so tutapata 11,150,000. Hii hapa tutakuwa tumepata kitu kinaitwa prime cost. Remember that prime cost is the summation of all direct cost. After adding the direct materials, direct labor and direct expenses, tunapata prime cost. So baada ya prime cost tunaenda sasa kwenye kipengele cha pili ambacho ni kutafuta zile overhead cost ama factory cost. So we are going to add manufacturing cost, or sometimes are referred to as factory cost. Manufacturing overhead cost. Or sometimes are referred to as manufacturing indirect cost. So from the question we had factory indirect wages, so here we shall have indirect wages, which are the cost of $2,900,000. We also had, so when you go to the additional information, Roman 2, we had lighting, rent and insurance are portioned as follows: factory 5/6 and administration 1/6. Hapa kwenye factory manake hizi factory 5/6 manake ndio zinaenda kwenye manufacturing cost, lakini hizi administration I mean 1/6 hizi hapa zenyewe ni zile administration cost za kawaida. Remember that kwenye cost tuna zile period cost na tuna zile tunaziita product cost, ambazo product cost ni zile cost ambazo zimetumika moja kwenye kuproduce commodity, lakini period cost are just cost ambazo zimekuwa incurred during the normal operation of the business. Kwa hiyo hapa akikwambia factory cost 5/6 maana yake hapo ni direct cost, kwa hiyo zitaenda moja kwa moja kwenye manufacturing cost statement, lakini hizo administration cost ambazo ni 1/6 zenyewe tutazipeleka kwenye manufacturing income statement ile kawaida, ile ambayo inadili na kuproduce zile merchandise. Kwa hiyo hapa tutapeleka hizi 5/6 na working zake nitazionyesha hapa kwenye hii cost statement yangu. So we shall have lightning, so we shall have 5/6 times lightning cost. Ukienda kwenye trial balance yetu tulipewa lightning 150,000. So if you take 5/6 times 150,000 utapata 125. That means that 5/6 of lightning were used in manufacturing or factory, but the remaining 1/6 I mean was used in the normal merchandising. The other apportionment was for rent. So we have a rent whereby rent was apportioned 5/6 also. So you shall have 5/6 times the rent amount from the trial balance at the cost of rent at the cost of 240. So when you take 5/6 times 240 or 200,000. The other apportionment was the apportionment for insurance. So you also have 5/6 times insurance amount from the trial balance was 84,000. This working sometimes unaweza kuzionyesha pembeni kwenye working zako, lakini nimeamua kuzionyesha hapa. 5/6 times 84, so you'll have 70,000. And the other indirect cost here was factory power and fuel. Maana factory power and fuel hizi hapa ni indirect cost, kwa zenyewe zinaenda kwenye overheads. Kwa hapo utakuwa na factory power and fuel. Factory power and fuel ambapo ni 274,000. Kwa 274,000. The other indirect cost hapa ilikopo ni kopo kuna depreciation on machine and plant ambapo ni 10% on cost. Kwa utakuwa na depreciation on machine and plant, kwa depreciation on machine and the plant. Itakuwa depreciation on machine and plant ambayo ipo ni 10% on cost. So tukiona kwenye trial balance yetu natafuta machinery and plant, kwenye trial balance ipo ni 4,600,000, lakini cost ambao amekupa ipo ni 5,600,000. Kwa hapo utatumia ya 5,600,000 kwanza ambao ni ya mwaka huko, kwa 10% times 5,600,000. So tukinandia hapo utapata 560,000. Kwa hiyo when you check there hatuna tena indirect cost zozote. Kwa hapa we shall add up, tajumlisha zote 290. So when we add up we'll get 4,074,000. So baada hapo utajumlisha sasa prime cost na add na hizi zote hizi factory cost au factory manufacturing cost. Kwa hiyo utapata hapa exponent 3 plus 47,900,000. Kwa hiyo hadi hapo utapata 15,990,000. So tukishafika hapo, kwenye manufacturing kuna 3 types of stocks. Tuna raw material, tuna zile finished goods na pia tunazo zile work in progress. Work in progress means that are the stocks ambazo bado hazijakamilika, so lazima tuje kuzi add. Kwa hapo ta add work in progress at start. So work in progress at start 370. Kwa tutakuwa na 270. So we adding this plus 270, tapata hapa 16,169,000. So tukadi hapo at start, tunakuja mwishoni kabisa kwenye statement yetu, tutakuja hapa ku less work in progress at end. Tutakuja ku less work in progress at the end, ambao work in progress at the end ambao tutaipata huku kwenye additional information iko ni 300,000. So tukitoa hapo 300,000 bakia na bakana 15 million 6 9 kwa hii ambayo tumepata huko mwishoni kabisa, hii ndio inaitwa ni cost of production. Hii ndio cost of production. Therefore, kwa conclude, cost of production au manufacturing cost. Manufacturing cost ilikuwa sasa nichukue direct material plus direct labor plus other direct expenses, afu ni add na zile manufacturing overhead. Overheads. Kwa hiyo nikijumlisha hizi ndi 3 hizi hapa ndio napata kitu kinaitwa prime cost. Kwa mpaka hapo statement yetu itakuwa imeshakamilika na tutakuwa tumemaliza part 1 ambayo ni kutafuta manufacturing cost, ambayo itatusaidia kwenda kuandaa ile manufacturing statement of financial position. Okay, the second part of our question will be preparing the manufacturing statement of financial position, whereby we are going to link the assets, liabilities and capital of Mr. Mshana business. So I will start with the fixed assets. Fixed asset, whereby from the trial balance Mr. Mshana had 2 fixed assets, the machine and the plant and also office furniture. So you have machine, machinery and the plant. Have machine and the plant, which had a cost of 5,600,000, but it had depreciation from the additional information that the depreciation on machine and plant and office furniture was 10% per annum on cost. So hapa tutafanya working kidogo ndio tutafute hiyo depreciation amount. So we'll have some workings, utazifanya huko chini kabisa. Fanya workings hapo. Na working 1 itakuwa kutafuta depreciation on machinery and the plant. Ambayo itakuwa 10% on cost, ambayo cost iliyopo ni 5,600,000. So hapo tutabaki na 560,000. But kutakuwa kuna increase in provision. Kwa hiyo utakuja hapo utatafuta provision for depreciation, ambayo machine depreciate from 5,600,000 tu. Kwenye trial balance pale alikwambia cost ipo 5,600,000, lakini kwenye trial balance ipo ni 4,600,000. Kwa hiyo lazima utoe 4,600,000. Kwa hapo utapata 1 million. So total depreciation will be 1 million na ile 560,000. So utapata 1,560,000 as total depreciation. Kwa hapa lazima makini kwamba nimechukua 10% ya 5,600,000, lakini baadaye nikatafuta difference between the cost and the amount in the trial balance ambao it's 1 million. After hapo na add up kwa unapata total depreciation ya machine and plant. Kwa total depreciation ya machine and plant ndio nakuja hapa kwenye trial balance yangu, I mean kwenye balance sheet. So here we should less depreciation. So we less the 560. So tukiless depreciation hapo utabaki na net book value, ambao net book value itakuwa sasa ndio hiyo cost ya machine plant kwa huu mwaka. Kana 40 yani ya kwanza, afu ingine hapo tuna office fixtures. Office fixtures ambao yenyewe ilikuwa na cost ya 400,000. So tutafuta depreciation yake pia. So difference kati ya 400,000 na hiyo ya kwenye trial balance, so itakuwa 400,000 minus 240, 160. So I will show the workings. Working number 2 mtaandika ni initial depreciation of office fixture. So it will be 10% times 400,000 ambayo itakuwa ni 40,000. Then we add na difference ya 100,000 na ile 240 ambayo itakuwa ni 160. So hiyo tutapata 200,000. Kwa hiyo ndio total depreciation. Hapa nimesimplify tu, nimechukua na ndio 160,000, nimetafuta difference kati ya cost of office fixtures amount ambapo ni 100,000, nikatoa ile kwenye trial balance ambapo ni 240. Kwa hapo tutapata 200,000. So tutakuja hapa less 200,000, hapo utabakia na 200,000. Kwa hizi hapa ndo fixed assets. After finding the so baada hapo tutajumlisha 4,040,000 utapata hapa 4,024,000 itakuwa ni total fixed assets. So after finding the total fixed assets tunakuja ku add na zile tunazita current assets. And the current assets from our question. Sasa when we are dealing with manufacturing accounts, we have 3 types of assets. We have the stocks, I mean current assets stock, we should have the stock of raw materials, stock of finished goods, and the stock of work in progress, and we are taking the closing stocks. Maana hii hapa inaendelea mwisho wa mwaka, so utakuwa na stock of raw material. We shall have a stock of raw materials which was for hapo, then tuna stock of finished goods stock of finished goods. Stocks of finished goods which was 200,000. Afu stock ya mwisho ni stock of work in progress, ambao stock wa work in progress ipo kwenye swali letu ni 300,000. Kwa hapa ndo stock zangu 3 nishaziandika. So after there natafutama kuna debtors or account receivables, na kwenye total balance here we have account receivables and account payables. So we should differentiate them. Account payables have a credit nature while the account receivables have a debit nature. So here we should have account receivables, buto na cost ya belonging bills like 8 we have cash at bank, tuna cost here. Then we had cash in hand, let's see. So hizo ndo current assets ambazo tulikuwa nazo. So after there we are going to add them. Go 48. So after adding the current asset you get a total of 47,000 million. So we are adding the fixed asset and the current assets. 240. So we'll have a total of 9,032,000. It's a total assets. So after getting the total assets, remember that the balance sheet is comprised of assets, capital and liabilities. So here you'll have financed by capital, and liabilities. So from the question, capital was 7 million, so we'll have capital, which was 7,100,056. Then we add the net profit. So the net profit hapa tulipewa kwenye Roman 4 we had net profit, lakini some questions hautapewa net profit, so utabidi ufungue ile manufacturing income statement ili ukalculate net profit. Kwa hiyo hapa net profit tulikuwa nayo, kwa utaiweka tu hapa net profit ambayo tulipewa ni milioni 1,796,000. So we'll sum up 156 add 1,396. So add napata 8,952,000. Lakini we had drawings, so we should less drawings because drawings inapunguza capital. Kwa hapa drawings upo ni 1,200,000. So 1,200,000 kabaki $7,752,000. So after there tunaenda kwenye liabilities, but in liability upo na short term liabilities tu ambayo upo ni account payables. So you'll have short term liabilities, ambayo ilikuwa ni account payables. Ambapo ni milioni 1,200,000 kaita. So after that tuna add hizo so when you add you get 90, 32. So at the end the total assets should be equal to the total liabilities and capital. So mpaka hapo utakuwa ushafungua manufacturing statement of financial position na tutakuwa tushafungua ile manufacturing cost statement. Kwa hiyo swali lako utakuwa limeishia hapo, maana utakuwa umemaliza kutafuta vipengele vyote vile ambavyo vilikuwa vimehitajika kwenye swali.